My guest is David Burrows. He's the President and Chief Investment Strategist at Barometer Capital Management. We're talking about North American large caps with Ben in Vancouver. Good afternoon, Ben. Welcome to Market Call tonight.
Oh, thank you, Michael. Thank you very much for taking my call. I appreciate that. Mr. Burrows, my question is on Morguard REIT. I'm holding it for income-generating purposes and also with the hope of little capital appreciation. I would greatly appreciate your thoughts on its fundamentals and whether the dividend would be safe.
Okay.
And also, if this is not good enough, you can suggest another REIT I can switch to another stock. I would greatly appreciate that too. Thank you so much.
All right.
Okay. So, Ben, certainly Morguard is a high-quality company. I think that the distributions are safe. This has suffered, like many of the other REITs, as rates were rising in the spring and summer. As rates have been moderating, you've been getting a lift, like in the other REITs. Again, we would prefer the industrial REITs to a commercial REIT. So I would prefer a Granite REIT, which I think probably has more room for growth in the dividends and the distributions. But ultimately, these REITs are good investments for income. Unless you think that you're going to see sharply higher interest rates, they're going to be fine.
Ben, again, the ticker symbol is GRT, the .UNs, and we are looking at an indicated gross yield of 5.9% right now. That is 17.5 cents paid out on a monthly basis, again, under the ticker symbol GRT, .UN. Let's go to St. John's now for Linda. Hi, Linda.
Hi, how are you this evening?
Good, how are you?
Fine, thanks. I'd like your opinion on AIG and the AIG warrants. Their earnings came out last week, and they were up above estimates, but since then the stock has gone down. They are now paying a dividend, which is something new, and I'm just wondering, what do you think of these stocks in general, and should I continue to hold? I'll hang up and listen to your answer. Thank you.
Thank you.
Okay, so the broad-based insurance companies in general, I think, look pretty good. AIG has a wonderful franchise. They obviously have had their issues over the last few years. They've been working their way through them. The thing that you really want to look at in the insurance companies now is what sort of return they can get on their portfolios. And we're in a better environment. I think this pullback probably is a good entry point. I'd buy the stock.
Okay, $47.59 is a point today. I'm pulling up here what the analyst community is saying about where it is a year from now, and the sentiment is maybe $55.
Yeah, I think that there's upside both in the share price and in the dividend as time goes by.
Okay, and again, that dividend is a dime paid out on a quarterly basis, currently about 4/5 of 1%. Thanks, Linda, for the call from St. John's. We're off to Sophia in Fort McMurray, Alberta. Hello.
Oh, hi. Thank you for taking my call.
Thank you.
I would like to know about CRESCENT Point, if it's a good time to sell or to hold.
All right.
Okay, well, really, Sophia, it's going to depend on your views on oil price here. I think that we prefer the yielding oil companies as opposed to the low-yield companies. CRESCENT Point, I think, is smart in that they've changed their dividend reinvestment policy, so they're not diluting the stock quite to the same degree. We own the stock. I think that there's a base in here around $40 that the share price can work off of. You're getting a nice yield, and as time goes by, you're going to see cash flows grow. I think that there'll be earnings will be something like 73 cents this year and $1 next year. I have no problem owning the stock. Ultimately, you own this because you think they are going to continue to be able to grow their production. This is a production growth story.
CPG's quarterly results are due out November 7th. Would you advise Ophelia to perhaps hold off on making any movements until after the numbers come out?
My only concern in the near term is I am concerned about oil price. So I think that there is some risk. This is one of the stronger performing companies in the group. We've pared back our energy weight just a little bit. That being said, this is one of the stronger performers in the group, and it's got a great yield attached.
Ophelia, thanks for that. From Fort McMurray now to Kingston and Rohan. Hello.
Hi. I was wondering what your views are on tech stocks. They've been trading close to 100 times 2014 earnings, Facebook, LinkedIn, Amazon. Just wondering what your views are on this.
Okay.
So on the social media companies, we touched on this a little bit earlier. Certainly there is some froth. There's no question. I think, though, the thing that you have to keep in mind is that these companies, many of them, are beating by a wide margin, both on revenues and on earnings. And you're not buying these for the valuation as they are today. You're buying them for what is coming. And as long as the trajectory of growth is strong, I think that there's opportunity. You look at a company like LinkedIn, LinkedIn has a very quickly growing subscriber base, and it's a business subscriber base. So there is opportunity to grow revenues there. So this is for us a small, higher risk piece of our portfolio, keeping in mind that media as a group, and now we're bulking that in with cable and with content providers, is a very strong cash flow generating sector, and it is one of the leading sectors in the market. One way you can invest in this group is there's a very good ETF, FDN, which is web-based companies. You can also buy the ETF SOCL, which is social media. Both of those give you a little bit less company risk, right, where you could have one company that drops a bomb on you. And then the media group PBS ETF is another which is very attractive.
Time now for the Market Call Minute. Right, for Vern in Mississauga, Valero, buy, sell, or hold.
I don't think you want to be anywhere near the refiners at this point.
For Jim in Hamilton, CATAMARAN Corporation, is it a buy, a sell, or a hold?
I think that this is a company that I'd be a little bit careful with. Stock's been extremely volatile.
You don't own it?
Do not own it.
Okay, for Andy in Montreal, ARC Resources, do you own that one?
Again, we prefer some of the U.S.-based higher growth oil and gas companies. ARC is performing well, though.
Okay, so maybe a hold?
It's a hold.
For Ernie in Victoria, Yamana Gold, buy, sell, or hold?
I just would stay away from the golds. This is a group that continues to underperform. It looks to me like the precious metal cycle is over for now.
American Tower for Natalie in Toronto.
Falls into the REIT category. I think that American Tower has a very good business model. It's one that has rallied much better than the rest of the REIT group since the REITs got better. This is one you can buy. It's higher growth, lower yield.
One of the best performing stocks of the year, Air Canada. Is it a buy, is it a sell, is it a hold?
We own the stock. They continue to expand their routes. Their seat miles are pretty good. This is a company that is doing a lot of right things, and the pension liabilities have gotten a lot better over the last year.
All right. Thank you for your calls, your emails, and the tweets, too. We're taking a brief break. On the topic of the tweets, confirmation to the Business News Network that, yes, Twitter has been priced $1 above the high end of its IPO range of $23 to $25 at $26 per share. The top picks coming up.